We can argue that in the past 35 years, China largely relies on investment rate. For example, given the official figure provided every year, we did some calculation. In the past 35 years, the average investment rate in China is about 45% of your GDP. So every year, China invests 45% of national output in fixed assets, and so that, to a great extent, explains the so-called economic success in China. But the investment rate actually is supported by bank lending. Over time, we're seeing that this situation cannot be sustained anymore. For example, I just show you one loan analysis done by McKinsey company. We're talking about the debt ratio, in different countries. If you look at China, which is especially you look at the corporate debt situation, which is second column. In China, as of the first half of 2014, corporate debt already amounts to 125% of China's GDP. So that is how serious the debt situation is. And in the US, I think the same figure is about 67% of GDP. So I think most people argue that this is one of the major reasons Chinese government has been proposing this idea of changing growth model. You have to change your growth model from investment-led to efficiency-driven. When you talk about efficiency-driven, it means that you need companies with very high level of return on invested capital. They cannot grow their size only. They have to grow their profits. They have to grow their returns they can deliver to shareholders. So that I think is the big background why we talk about the great shakeup, because the macro foundation of the Chinese economy built up over the past 35 years have been along this direction. You are seeing the surge of corporate giants, but majority of them actually SOEs without much efficiency. And that is something we have to take into account when we think about the future dynamics of the economy. One thing I would like to point out is about the consequence of this growth model, this kind of dynamics on the finance industry in China. For example, one thing people have been using to describe how important the finance is this figure, the finance income as a percentage of GDP. So, in other words, how much finance industry contribute to a nation's GDP. If you look at the US, you can see that in the past 130 years, the range is from 4% to 6%. The two time points, US overtake, this number exceeds 6%. One is 1929, the other one is 2006. So when the finance become larger than 6% of your GDP, you got a crisis. So that is the situation in the US. But if you look at China, right, we do the same calculation. We look at what happened in the Chinese economy. We look at how important the finance industry is in China. You can see that over time, it's increasing. As of last year, the first quarter of last year, this figure is 9.5% of GDP. So which means that out of $100 of GDP, finance industry contribute $9.5, so 9.5%. So this industry is much larger than the US level, if you just focus on this figure. So what's the point? The point is that because you follow this fixed asset investment growth model, and your investment largely is supported by finance industry, therefore finance become much more important. In the meantime, you're seeing that the crowding out effect of your real sector, so the money will not swarm to the real sector. Instead, they just move around within this finance sector, which make the finance industry bigger and bigger over time. But in the meantime, the real sector cannot get support. I did a little bit of analysis about this. For example, in this chart, just very quickly, I can run through what it implies. So on the horizontal axis, you have finance income over GDP, which shows how important the finance is in your nation. Vertically, you have a real GDP growth rate. And you can see that over time, you have this negative correlation between the two, which is very significant, which shows that when finance becomes very, very important, your real GDP growth rate actually declines. So that is the situation in China, which means that the original, the previous growth model, which has supported China's fast economic growth in the past 5 years cannot be sustained because it relies on bank lending, and it's getting harder to grow your finance to support this kind of economic growth. So back to the identity I introduced earlier. If we predict the Chinese economy maybe 10 years or 13 years from today, by 2013, what could be any scenarios? So here I just use these two drivers of your economic growth. One is investment rate. The other one is return on invested capital, which is a vertical axis. You can see that China may end up with one of the four end scenarios. Number one is the northeast corner. If the investment rate continues to be high, and meanwhile China can improve return on invested capital, then you have the first scenario, which means that China can report a very high growth rate for a lot of 13 years, and meanwhile the quality of growth is great. So that is the first scenario. The second scenario, in my understanding, is status quo, which means that the Chinese government can still rely on very aggressive fiscal policy and monetary policy. They kick in a lot of liquidity to boost investment rate. But in the meantime, the return on invested capital remains at a low level. Then China can still maintain a moderate growth rate, maybe 6% or 7%, or maybe higher in some years or quarters. But the quality of growth is very poor. So that is the second scenario. The third scenario probably is something the policymakers in China have been talking about in the past years, which is so-called a middle-income trap. The argument is the following: if the investment drops because the business people in China and the companies in China are losing confidence, and in the meantime, the return on invested capital cannot be further improved, then the growth rate in China probably will be somewhere around 2 or 3% per year. And then the chance of falling into the so-called middle income trap is going to be very high. So that is the third scenario. The fourth scenario is the so-called new normal, which means that if somehow China is able to change its growth model, it changes its reliance on credit-fueled investment rate. Instead, they rely on much more competitive companies, which report very high return on invested capital. In aggregate, the overall return on invested capital in China can be improved. In that case, maybe the GDP growth rate in the next 10 years or even longer will be somewhere around 5%, but the quality is very high. Then you have a new normal. So if you think about what could happen to the Chinese economy in the next 10 to 15 years, the only thing Chinese government, Chinese entrepreneurs can control is a vertical variable, which is return on invested capital. So this is why I argue that on the micro foundation of the economy, we need a great shake-up, which means that we need a large number of companies which are not only big, they can also generate a very high return on invested capital, so they can, in aggregate, level up the return on invested capital in the whole economy, and eventually China can end up in the fourth scenario. So the key variable here is return on invested capital. This is why we argue that going forward, we need a great shake-up. So whether this is possible, I think the couple of things I would like to mention. What could be the new source of growth? How likely China can improve its return on invested capital. I have a couple of analysis here. Let me put them out. One thing I'm very confident is that, I apologize about the Chinese mess up a little bit. I want to talk about is that if you look at what happened in the past 35 years, right, total factor productivity has been one of the major drivers of GDP per capita in China. So based on economist estimation, TFP, which measures how efficient those factors have been used in the production process, accounts for close to 80% of GDP per capita growth in China. So that is what China has done right in the past because of new technology, because of urbanization process, because of China opening up to foreign capital, to foreign markets, etc. So total factor productivity accounts for close to 80% of China's GDP per capita growth in the past 35 years. But if you look at the current level, it's only about 20% of the US level. So after 35 years of fast growth, TFP is only 20% of US level in China, which means that in the next 15 years, or maybe longer, China has huge room to improve its TFP. And the TFP, I think from corporate finance perspective, is closely associated with return on invested capital I just mentioned. So which means that if China can switch its growth focus from size to TFP to return on invested capital, China has a huge room to further improve its economic growth quality. To give you guys a couple of comparison examples, right now I think Germany, the German TFP is about 96% of the US level. French is about 95%. Japan is about 80%. South Korea is about 50%. If we think about in the next 10 years or 15 years, China can improve this level to Korean level, which is 50% of US level. I'm very confident that China can continue its very strong economic growth for another 10 to 20 years. But the bottom line is that you have to change your macro foundation. You have to shift your focus from the size-driven business model to profitability or return on invested capital-driven business model. And how to do that? Let me just skip out a couple of things. I'd like to talk about the positives. There are a couple of things I think which are very positive, give people optimistic views about the future of the Chinese economy. For example, I want to point out a couple of facts which may be counterfactual to so-called common sense, but if you think deeply about those structural factors, you will find that they can provide very strong support for the transformation I just mentioned. And this kind of transformation is very likely, is very possible, and very likely will happen in the next 10 to 15 years. One thing is about the size. For example, here, I did a very rough calculation. If we think about the nominal GDP in China, suppose China maintain 5% or 6% of real GDP growth rate, and in the meantime, the CPI is only 3%. I think by 2030, we did some calculation, the total nominal GDP in China will be somewhere around 250 trillion RMB, which is about 3 times larger than the current size. And at 13 years, I pretty much believe that this is going to happen. And if you think about what could be the implications is that, for example, you talk about the finance industry. Currently, the total size of financial asset to GDP in China is about 3.5 times. Suppose by 2030, this ratio increased to 4 times, which is quite reasonable by international standard. Then by 2030, the total financial asset in China will be somewhere around 1,000 trillion RMB. And remember that right now, the largest bank in China is ICBC. The total asset of ICBC is only 22 trillion RMB. And we're talking about 1,000 trillion RMB in 13 years. And that is huge growth potential for people who are willing to do finance in China. But what we need here is not traditional, conventional commercial banks. We need a new business, maybe fintech, maybe something else. So that is one example. Another example I really want to mention here is that people are talking about the running out of demographic dividend because Chinese society is becoming aging society, and you're seeing older people. I think we did some calculation. By 2030, the number of people who are over 65 years old will reach 300 million in China. That is going to be a huge burden for China's further economic development. But in the meantime, if you look at what happened in the young generation, for example, in China we have this jargon, right, we call 90后. Literally translated, it means post-90s. It is referred to the group of people who are born after 1990. And by 2030, the total number of post-90 will be 400 million. So which means that in China you will have 400 million people who are under age 40 years old. And this is the size of European Union. And they are totally different group of people, and half of them will be college educated. So 200 million of these post-90s, they finish a college education. And I think in human history, you have never seen an economy with so many college educated people in your labor force. I think in US, the current figure is 90 million people. And in China right now, it's 100 million. In South Korea, it's 9 million. But we're talking about 200 million college graduates in the labor force. And so that I think they can make a lot of things happen. So those are positives. For example, people normally talk about made in China will be replaced by innovating in China. I think that probably is wrong. I think probably by 2030, made in China will be replaced by make for China. So you provide products, you provide services for China. So which part of China? I would say that the post-90s, those young people, they have totally different consumption preference, totally different habits. And they probably will be your main target. And the size is huge enough. It's 400 million of them. And in the meantime, I think once they join the labor force, they become entrepreneurs, they become managers of companies, they become decision makers. This group of people will be very different from previous generation of corporate leaders, and they can make a lot of things happen. So that I think is why I'm relatively optimistic about the Chinese economy going forward, because of those positives, because of the dynamics we're seeing going forward. So I'm going to say a few things about what could be the next big things. Because you talk about a great shake-up, you look at traditional corporate giants in China. There are many financial companies and multi, right? And going forward, what could be the next big things in China? I would like to point out a couple of industries. For example, I think David Dollar just mentioned the healthcare, right? Healthcare industry, in my understanding, probably will be one of the mostly talked about industries in China going forward. Currently, this industry only accounts for 5.6% of GDP in China. And in the US, I think this figure is 18%. Okay, remember that in China, finance industry accounts for 9.5% of GDP, but healthcare, which is much more important, only accounts for 5.6%. Suppose in the next 13 years, this level increased to 10% of GDP. Remember that my estimation shows by 2030, the nominal GDP in China will be somewhere around 250 trillion RMB. Then 10% of that is going to be 25 trillion RMB. 25 trillion RMB is twice the size of the real estate market in China last year, which means that in 13 years, you're going to see an industry which is twice the size of the largest industry in China, the real estate, the property market in China. So that is real opportunities. And right now, if you talk about the situation, we do have very good hospitals, but we don't have healthcare companies which can be called world class. So that is, I think, something people can really think about. And I can give you a lot of other examples. For example, another thing we talk about is cultural sports, etc. We have done some analysis. For example, in the sports, as of 2025, 8 years from today, the market size will be somewhere around 5 trillion RMB. And again, we do not have strong and big players in sector yet. And if you talk about movies, talk about educations, talk about a lot of other industries which are related to the new generation's consumption, pretty much we have plenty of opportunities.